Good morning, everyone. Thank you for tuning in to the Bank Roadshow meeting on this very warm Tuesday morning. I'm Andrea Mendez-Barrutia, the Director of Community Engagement for the Hispanic Collaborative. As a reminder, the purpose of the monthly Bank Roadshow series is to support Milwaukee's banking, financial, and frontline entrepreneur support community with in-depth information on the entrepreneurial ecosystem programs and services in order to strengthen our community's existing and budding entrepreneurs. This is an informal meeting to share the resources we have in our community. Today, we are happy to have Therese Cairo joining us. Therese is the President and CEO of the Legacy Redevelopment Corporation. Therese will present and then we'll open it up to some Q&A.
Good morning, everybody. I saw some extra people join the call. So I am Therese Cairo with Legacy Redevelopment Corporation, President and CEO. I've been here since 2016. Legacy Redevelopment Corp was established in 2003. We are a CDFI here in the city of Milwaukee. We lend to small businesses in Milwaukee and Racine. Our mission as a nonprofit CDFI is to provide strategic lending solutions and ongoing support to Milwaukee small businesses and nonprofit organizations to foster financial independence, sustain growth, and revitalize our communities. Let me put my phone on silent. Sorry about that. So in our vision, through innovative loan products, LRC will empower urban businesses and organizations to be self-sustaining. That's key for us, self-sustaining, and achieve their financial goals by stimulating economic development in Milwaukee and newly into Racine. We will energize neighborhoods and build stronger communities. LRC's lending market, who do we serve to? LRC provides strategic urban lending, again, to Milwaukee and Racine small businesses that cannot typically get traditional financing. Our advances and our mission are through our innovative micro and small business loan products and technical assistance. Our loan products range anywhere from a microloan to a commercial real estate acquisition and rehab. As of the end of 21, our portfolio size is a little under $9 million. We have an average loan size of about $223,000. We do loans anywhere from small as $5,000 all the way up to $300,000. That's kind of our cap. If there's anything over that, we still entertain it, but would normally look for participants to help us to get the transaction done. One thing about a CDFI that is different from a traditional bank or a credit union, when you become a CDFI, you are identified in certain areas, which are called target areas, where you can lend, and your lending has to be at least 60% in that target market. As of right now, our target market is about 168 distressed census tracts in the inner city of Milwaukee. 90% or above of our lending right now is to our target market. Again, we've recently expanded to Racine. So in order to expand your reach, you have to do the work, be able to demonstrate the need, and then you can adjust your target market accordingly. So that's the big difference between how banks and credit unions lend versus CDFIs. Right now, this is our target market. This is the area on the map of where we can lend. These are the approved areas in Milwaukee and surrounding areas where the city of where Legacy can lend to. And we will, towards the end of the year, hopefully, prayerfully extend that target market, where in this map look a little different to the city of Racine. So some of the lending products that we offer, a lot of people will assume when you look at our logo that our primary lending product is real estate. It is not. Earlier on in the organization's business start, there were more emphasis put on real estate, but Our portfolio has been diversified for quite a while now, doing loans again as micro loans. We also provide working capital lines and loans, equipment inventory loans, commercial real estate purchases for business purposes. So if you have a business that's looking to purchase your own real estate, we will take a look at that. We also look at commercial real estate for purchase and rehab. We do real estate portfolio purchases geared to close the generational wealth gap, and I'll talk about that a little bit more. And then subcontracting financing. The real estate portfolio purchase loan is something that we've started to do because we saw that there was a gap that needed to be filled for minority real estate owners, where they were looking to do purchases but weren't able to have the percentage down for that a traditional bank or a credit union typically will ask for. So we wanted to try to put something in place where we can speak to that, still having in mind that Legacy Redevelopment, we are a mission-based lender. So our goal is never in any of the products that we do to just simply give a loan for you to be the only person that benefits. We want to see that there is some type of give back component. So even with real estate portfolio purchases to close this generational wealth gap, we want to look to see that who are you putting in the properties? Is a single mom? Are you looking to have people in the property and eventually you'll sell that property to them? Are they low to moderate income families? Those are kind of the things that we look at. We don't want to see high target rents when we're doing these types of transactions, nor do we want to see the real estate owner to struggle building their portfolio either. So there's a nice meet in the middle. So we do take a look at those, and we try increase the home ownership numbers for minority owners. Credit scores. We're not score driven. So when you ask us about, is there a minimum credit score? There is not. We do look at credit. I just want to make that clear. We do pull your credit. It is a hard pull, but there is no minimum. We don't start at 640. We don't start at 620. We don't start at 680. We look at the history and the meat of the credit report. If there are issues on the credit, we will talk about those. If you have open judgments, those do need to be paid. If there are collections, a payment arrangement or an explanation of what it is. So there will be a more in-depth conversation, but there is nothing there's not a number that says yes or no on whether or not Legacy will move forward with looking at an application for you. So seeking financial assistance, what are we looking for? So probably pretty much standard of everyone. One of the most important things is a business plan. Some of the subjects that should be covered in your business plan, you most definitely want to have a vision and a mission put in there. We describe your business plan as your blueprint. This is your starting point. This lets us know that you've sat down and you've thought about this. You know what you want your business to look like. So there's time that's been invested. And I encourage people to have a business plan because it doesn't have to be this robust thing because it can be intimidating. So if you have some meat to a business plan, the goal would be for you to go back to that business plan and continue to develop it. And that's the primary premise of why a business plan should be submitted to Legacy for review. Financial documentation, we look for your last 3 years of your personal tax returns, your business tax returns. If you're a startup, we want to see 3 years of financial projections, a completed application, and a personal financial statement. Sometimes there's other documents that we need. Sometimes a deal may not be as strong as you would like it to be. Say, for instance, you have someone who does like clean outs of City of Milwaukee properties. It would help if it's not that strong financially, they haven't been around that long. The information that they have for you is not as tight as you would like to see it. Sometimes if you have other documents that you can provide, like if you have contracts in place for the city of Milwaukee, we look at all of those things because those are receivables. Those are guaranteed dollars as long as you do the work. We look at those types of things. Your resume will kind of speak to the experience that you have. Maybe you are a startup, but you've done this for other people on somebody else's payroll. So you know it in and out. We want to know that. We want to be able to communicate that to our loan committee. Like, we believe in what this individual can do. They've been doing this for 25 years prior to deciding they wanted to be their own boss. So we look at those things, and that's how we're able to tighten up and beef up our loan proposals to make it an appealing loan credit that we submit to loan committee. And then renderings, if there's something that you're doing in the real estate market. Once you become a loan client through Legacy Redevelopment, technical assistance is provided to our borrowers. You will meet with our business consultant. Depending on where you are with your business and financial acumen will dictate what happens next. These are some of the services that we offer. We will take a look at where you are with your insurances and make sure you have the right insurances in place. The risk management for your business, bookkeeping, business taxes, and succession planning are some of the services that we look at and will go over with you, work with you, or refer out with some of our vendors. So for additional information, here is our website, www.lrcmke.com. Right now, our lending department consists of myself and my chief lending officer, Errol Barnett. So for any additional information, feel free to reach out to either one of us. Thank you.
Thank you, Therese. So we'd like to open it up to some Q&A. So if you have some questions, now is the time. And then I was curious in terms of like business plan development and some of the other things that you all look at, are there any other entrepreneurial support organizations that you all work closely with?
So right now everything is internally. We make assessments and we normally will connect them immediately with accountants or whatever area it's in. We've done some work with Northwestern Mutual for some succession planning and things of that nature.
Thank you. I think maybe everyone knows your organization too well.
Yeah, just a quick question for you. When we're, working with clients, is there like an ideal client that you would say we should be looking at that would be key to refer to you? Like, how can we best support you? You do a phenomenal job with supporting us. So how are we able to best support you?
Thank you. Yeah, most definitely. So our focus is on minority small businesses. And we want to work with people that can't get, we only work with people that cannot get traditional financing. Because if you're able to go to a traditional bank or a credit union, that's where we want you to be. As the CDFI, of course, our rates are not what you guys' rates would be for a commercial loan because there's more risk involved. So I communicate that to people when they come and they have a 750 or 800 credit score and they have revenues are $500,000, $1 million. Ideally, you should be able to go to see you, Pam, and not me. So we want to help that group of people that have not been successful with being able to secure financing, and not just financing, not being able to get that support to be able to develop the business. And what I'm seeing is in our market, we all have a niche in the CDFI world. And sometimes we'll have small businesses that come to us and they're no further along than they were when they first started. We have to be able to work to try to change that. So that's the group of folks that we want to work with. Those people that are not quite bank ready, but have the desire, they have things in place to want to get there. They just need some help to get over the hump.
Gotcha. And then is there a minimum loan amount or maximum loan amount?
Our
that you work
minimum
with?
is typically around 5,000 as a
Okay.
micro loan, and then we'll go up to around 300.
Okay,
We
300K. Okay.
have looked at deals that are over that, but if we do, we have to participate with another lender because that's the max that we'll lend out.
Okay. Okay. Gotcha. We're CDFI also, and we do participatory lending as well on deals, but we haven't done much any really commercial lending outside of the faith-based community in the Milwaukee area. And one of the reasons for that is that, to your point, there's a lot of CDFIs that are doing a lot of great work, and we didn't want to come in to the market and be competition versus working collaboratively with that the market base that we're looking to serve.
Well, you guys covering the faith-based community is huge because a lot of people don't want to touch the faith-based community anymore.
Yep. Yeah, that's true.
Thank you, Pamela.
Mhm.
Any other questions for Therese?
Therese, this is Demetrius. I don't know if you already covered this part, but what about loans for we got some people that they want to be like landlords, they want to be able to purchase properties and be able to manage those properties. Is that something you do as well?
Say that one more time, Demetrius.
Okay, there's some people that come in. We got some customers that come in and they want to be loans because they want to buy houses and be able to manage those properties. So is that something you do as well?
Yeah, I mean, if it falls under the definition I was talking about before with as far as the closing the generational wealth gap for in the real estate market, those we will take a look at those. Now, if you have a borrower who has the ability to put down the required down payments and, you know, the credit scores and everything are intact, those people we probably would not look at. We will want you guys to be able to assist them if you can. But if it's somebody that's short as far as the ability to come into a deal with 20-30% down, we'll look at a deal like that. And you know, as long as one of the components of what they're trying to do is not, we're not trying to see high market rate rents. We want it to be affordable for people. Are they in communities where if there was a stable and living environment that would change the trajectory of that neighborhood? Those are the types of deals that we want to look at.
Mm-hmm. All right, thank you.
Mm-hmm.
Thank you, Demetrius. Any other questions? And I see Athena on the call, and Athena, thank you for referring us to Therese in the Legacy Redevelopment Corporation.
I have a question. See, I'm mute. Okay. Therese, the real estate loans that you mentioned, they go from land to building, or just
New construction?
New construction. Yes.
Yeah, we have done new construction deals. Those would probably fall in that area where we were talking about participating out. Because normally new construction was going to be over 300,000. Unless you're doing like a single family, you might be able to build high twos, depending on what the material costs are, but we will look at new construction.
Yeah, that's nice. Not thinking about the families, thinking about in the business part, like a building, a warehouse, you know, and new construction.
Okay. Yeah. So we can most definitely look at it, and depending on what the price points are, Rita. If not, if we didn't participate out, we do have a lending partner that we kind of tag team on this kind of stuff, Northwest Side CDC. Willie's group does larger loans. He's their executive director. He does larger loans than what Legacy would do. So if it's something that's outside of our scope, I would probably refer it to him. We also do loans around that area.
Thank you.
You're welcome.
Thank you, Rita.
You're welcome.
Last time for questions. Okay, I think I might be having some internet issues. So Therese, thank you again for joining us this morning and presenting on the Legacy Redevelopment Corporation. It was great to hear about what you're doing in the community, get some questions answered. And we, appreciate what you do. Everyone, we hope that you will join us next month on Tuesday, July 19th at the next Bank Roadshow meeting. And that meeting will feature LISC. Thank you all and have a wonderful day.